I mean, these are the smartest and most educated economists in the world saying that inflation is transitory, that is, it's not going to be around. And yet here you are, you have regular people, random people on YouTube saying, wait, how does this make any sense? Are they lying to us, or are they really just ignorant? And
let's talk about that for a second, because it's a super astute point. Because when in a lot of my networking circles, and a lot of yours as well, I mean, inflation, albeit it's on everyone's radar, my lifestyle is not changing because inflation is rising. I'm assuming that you can say the same for a lot of your conversations as well. So, in that same vein, we know who it can be really, really bad for. Folks that are really paycheck to paycheck. Who is it good for, and how?
So let's explain it this way. When the government, or anyone, let's say the government, sends out a $2,000 stimulus check to everybody, minus, let's just say, the wealthiest 10% of people. If the bottom 90% of people get a $2,000 or $200,000 check, what happens? Well, what we saw happen was some people use this money to pay down debt. Some people use this money to invest. But most people, the majority of people, use this money to spend. Now, where was this money going? Well, some people went to Walmart, Kroger, Target to buy their necessities. Some people went to Amazon, Lululemon. Some people went to Gucci and Louis Vuitton. And interestingly, Louis Vuitton, which is obviously a luxury brand, in 2021 we were in a recession, yet they were making record sales. Something doesn't add up when that happens. I mean, I remember in 2021, I was living in Chicago for a little while, and we lived pretty close to Michigan Avenue. Beautiful city. I love Chicago. And Michigan Avenue is where all the high-end stores are. And I remember walking down these streets in the middle of a day on a Tuesday or Wednesday with my wife, and I'm like, there's a 2-hour line to get into Gucci. There's an hour-and-a-half line to get into so many of these luxury stores in the middle of a day. And it just didn't make sense. Well, what we're seeing is a lot of people use this money to spend. Okay, so now let's think about that. More money is printed. So now you have more dollars in the world. These dollars are sent out to regular people. In the short term, regular people feel richer. You got an extra couple $1,000s. Now you take this couple $1,000s. Now some people, I'm going to say this again, some people who are financially educated did smart things with this money. But you had a lot of people who took this money and they spent it on things they didn't need. This is, when they call it a stimulus check, what does that mean? Are you trying to stimulate your individual wealth? No, it's a stimulus check for the economy. They want you to go out and spend it. So now when you go to Walmart, or you go to Amazon, or you go to Lululemon, or you go to Gucci and you spend this money, where does that money go? Well, now you go and spend this money and you get a thing. This thing is disposable. It's going to be worth $0. It could be food. It could be clothes. It could be electronics. It could be anything. You buy this thing, which is now worth nothing. And now the corporation, the company, gets the money that you spent. And now, again, there's a bigger amount of dollars out there. And now these dollars have just flown to the wealthy, because now it goes to Walmart, Lululemon, Amazon, Apple. And now they control a bigger share of the dollars, because now there's less dollars out there, meaning if you had $1,000 in the bank before and after, you own a smaller percentage of the wealth. But now who does it benefit? Benefits the shareholders, the owners of the companies. Now, the nice thing is you don't need to be a billionaire to own a piece of Walmart or to own a piece of these corporations. You can start investing in corporations with as little as $1. And some people did that. Some people began investing in 2020 and 2021. And you saw the gains. You saw the stock prices of these companies soar in 2020 and 2021. Why? Because more people were shopping there, more people were buying more things there, and these companies saw bigger revenues and bigger profits. And so who does it benefit? It benefits the people who own the means of production. And who does that? It's not just rich people. It's not just multimillionaires. It's people who are financially educated. Now, sure, if you have $10 million to invest versus $100 to invest, the amount of dollars you're going to see in a return is bigger on the $10 million, but everybody starts somewhere. And it's better to start with $100 than to not start at all. And this is why it benefits the financially educated. And now, of course, we're going through a correction and slowdown in everything right now. However, again, It's just pieces. There's different pieces of financial education for different pieces of the economy, and understanding how to use your money, how to be a long-term investor, because what we've seen over the long term is long-term investors make the most money over the long term, and it's not the traders.